We are talking property this morning. The new Property Monitor monthly report is out. It shows that the Dubai market's set a new annual record. We knew that. But it suggests that the off-plan market might not be seeing the slowdown that everyone has thought. And we didn't know that. To join us and put it all in context, Jean Jahinki, COO of Property Monitor and Director of Market Intelligence and Research at Cavendish Maxwell. Thank you so much for joining us.
Well, thanks for having me. Loving the outdoor office today.
It's not bad, is it? And the weather, well, thank goodness it's not last Friday, is all that I can say weather-wise. Right, you very kindly gave us the heads up this month when property prices reached the peak of their last cycle. Whereabouts are we now?
So we're at that peak of the last cycle, on average, Dubai-wide. Nice, easy number to remember, 1,234 dirhams a square foot. So that puts us equal at parity to the last peak of September 2014.
And yet, this report has got a couple of interesting trends in it that you have seen in October. The first one, that the rate of price appreciation is now slowing. What are you seeing?
Yeah, so that increase that we saw to reach that parity, we only went up 0.14% month on month. If we look at the market recovery cycle, the 36 months that we've gone through so far, on average, we're about 1.2% month on month, which is a really nice, stable price growth. You've heard me bang on in the past about if we see something that's 2.5%, 3%, that's prices running away. And that's something we saw in the last market cycle. That was only a 24-month cycle, and in the middle of that, you had sort of almost right in the middle, some months where it was 2.25%, 2.5%, and that was really rapidly running away. This time, it's been nice and gradual, and the last couple of months, it's started to even moderate further.
What does that suggest in terms of where we are in the cycle?
So we're going to see anything sort of plus minus 1% is healthy, right? It's not indicative of the market running away, but also not of it sort of chasing down and going a downward cycle. It's not necessarily saying we're going to a plateau. We're just seeing a lot of prices where they have reached their peak. You're not seeing sellers being able to get 5-10% more above the last sale. They're getting 5-10,000 more above the last sale now. And a lot of that's in the ready property market, the completed segment. So I think you've seen that runaway growth that's stopped, and now we're seeing much more gradual, steady price appreciation.
And on the volume side, where we also saw a new annual record in the last month, you're looking at the number of transactions and say that they're actually declining.
Yeah, so looking at the data, something was off. Right? So we went from an average of about 10,500 transactions for the last 12 months rolling to in August, we were about 12,000 transactions. And in September, we dropped down to 7,000. That's a big drop. And then we also saw October them at a similarly low point. It just doesn't make sense. Digging into it deeper, it started to uncover a few things. The drop was actually in the off-plan market, in accrued registrations, whereas you had Title D completed properties staying relatively steady at about 5,500 transactions a month. But looking into the off-plan, it was like the wind got sucked out of the sails of the off-plan market all at one time. Every developer across the market, every product type, it just didn't add up and didn't make sense. So we've been very careful over the last couple of months about what we've been talking about, because those things just don't line up.
So it doesn't line up that off-plan sales looked like on the face of it that they were falling?
It's fine for them to fall, but not to that extent. For a market to lose pretty much all the steam at once across every single developer without a GFC, without a COVID-level crisis, that just doesn't happen. And at the same time, for the ready market to continue, you'd expect to see those happen actually at the same time in lockstep. So we decided to look into it further. We have a lot of developer clients, and speaking with them, they were noticing that transactions that they had completed and registered and submitted not actually showing up in the data yet, which is not unnecessarily weird. You do have a delay sometimes in that being completed and it coming up in the data, but over 2 months and the sheer volume of transactions, it really started to ring some alarm bells.
Okay, so where are we with this now?
Well, over the weekend, it was fixed. So the missing transactions, if we put it, or delayed transactions probably better, there was about 10,000 of those, a total sales volume of 20 billion over the last 2 months. That's now back in the data set. So if we look at things now, there's been zero decline in off-plan in September. In October, there was about an 8% decline in transactions, but that's still putting you at 11,000 transactions happening overall, and off-plan numbers not dropping anywhere near significantly. So on an annual basis, looking at transactions, we have not only hit the highest ever and reached a new peak. We smashed it. 110,000 transactions now gone through, but 100,000 of those being for residential property, and putting us on track now to do probably 125 to 130,000 transactions for the year. That puts us a good 30,000 almost above the previous high that we had in transactions.
And with those off-plan sales back on the books, if you like, if that delay is sort of being accounted for, where are we just in the off-plan health?
So if you, hate to say it, ignore headlines from the last 2 months related to off-plan. They're not entirely a full picture of that market. The off-plan market, incredibly strong with launches. Last month, we saw about 11,000 plus units come to market for sale and new launches. And seeing the months previous to that, it's about 77,000 for the year. The majority of those are being absorbed at launch within a month or two. So there's incredible strength in the off-plan market, both from domestic interest and abroad. And we see that continuing. Developers' behavior is a thing to watch. They're very bullish. New launches coming. Not a lot of incentives or concessions being offered. They're not having to pay exorbitantly high commissions, not having to give away exorbitant post-handover payment plans or concessions and fees. They're very confident, and if you look at the transaction volumes now, it marries up with that.
And when you say bullish with new launches, what can you tell me about the pipeline?
It's big. So we've seen about, I think it's 250 plus project launches this year, 77,000 units. We're tracking in excess now of 150 other projects that are in the planning stage that are going to come to market probably over the next quarter, maybe the next 2 quarters. And number of units, hard to tell right now, big mix between apartments, villas and townhouses. But that together, that's got to be at least another 30 to 40,000 units. What that's going to mean, 3, 4, 5 years from now, we have a lot of property that's going to be coming to the market, and we want to see then is population growth and that demand be there to support it once it's handed over. It's one thing for someone to buy it now, but you need someone to occupy it, pay the rent, or to buy it in the open market.
Well, speaking of rents, I'm looking at your report again. You're saying that rental yields are holding steady and asking if that means that they've topped out.
Yeah, and I think for the most part, yields I think have. Rents in some areas have as well, right? And a part of it is because you're seeing these handovers happen. You've got Ranches 3, which has taken some of that pressure off of the townhouse market and single family market. And you've got more and more launches coming on, so more inventory comes in. You're going to have a supply-demand balance rather than right now there's more demand than supply. So you're going to start to see eventually coming into the couple of quarters of next year some final relief for tenants. Right? How much and where exactly and when, it's just going to be early in the new year. You'll start to see more of it.
All right, there you go. Not the first person to talk about some relief on the horizon for the rental community here in Dubai. We had the same from Allsop and Allsop the other day, saying that they were seeing an increase in the number of cheques that landlords were accepting. Sian Jahinki, COO of Property Monitor and Director of Market Intelligence and Research at Cavendish Maxwell, chasing down the numbers, particularly on the off-plan sales, which I know is something that he has been almost obsessed about over the last couple of months. Thank you so much for joining us on the show this morning.